Laura Anthony, founding partner of Anthony P. LLC, a full-service corporate securities and business transaction law firm. Today is the second in a Lawcast series talking about recent amendments to the NASDAQ 20% rule. Effective to September 26, 2018, NASDAQ amended Rule 5635D to provide greater flexibility and certainty for companies to determine when a shareholder vote is necessary to approve a transaction that would result in the issuance of 20% or more of the outstanding common stock, or 20% or more of the outstanding voting power in a PIPE or similar private placement financing transaction. The amendment did not change the remainder of Rule 5635, which requires shareholder approval for transactions such as issuances involving an acquisition of stock or assets of another company, or change of control, or equity compensation that result in 20% or greater dilution. NASDAQ's impetus for amending the rule was to strike a balance between the protection of investors via the shareholder approval process and a company's flexibility to efficiently negotiate a deal to raise money quickly with a price that accurately reflects the market value of its security. In the rule change release, NASDAQ noted that book value is based on historic values and therefore is not an appropriate measure of whether a transaction is dilutive or should otherwise require shareholder approval. Moreover, book value is one of several financial data points that is already incorporated into the market value of a security. Using the last closing price rather than the last closing bid price reflects a sales price at one of the more liquid times of the day and therefore is believed to be more transparent to investors. Adding the option of choosing between the closing bid price and the 5-day average closing price provides more flexibility and certainty for companies in their transactions. For example, in a declining market, the 5-day average closing price will be above the current market price, which could make it difficult for companies to close transactions because investors could buy shares at a lower price in the market itself. Likewise, in a rising market, the 5-day average could result in a below-market transaction, triggering shareholder approval requirements. The rule amendment also combines the existing two sections of Rule 5635D into one, such that a 20% issuance for purposes of the rule would involve a transaction other than a public offering, involving the sale, issuance, or potential issuance by a company of common stock or securities convertible into or exercisable for common stock, which alone or together with sales by officers, directors, or substantial shareholders of the company equals 20% or more of the common stock, or 20% or more of the outstanding voting stock before the issuance. This change did not make any substantive change, but did definitely add certainty to the language and made it more clear and concise. I'm securities attorney Laura Anthony, founding partner of Anthony P. LLC and producer of Lawcast. Should you have any questions about today's topic, please visit securitieslawblog.com and lawcast.com or contact me directly. Inquiries of a technical nature are always encouraged.